Okay, for this video, we're going to cover the Schedule I-1 as part of the Form 5471, and the I-1 is used to report information on GILTI, right? So Global Intangible Low-Taxed Income. Now, the Schedule I-1 should be completed in cases even where you're not going to have any GILTI income if you meet the certain category of filer. So if we go back to our fact pattern and our table here as part of our slides, required information, we're working with Schedule I-1, right? So separate Schedule I-1. This should be included even if there's going to be zeros for Cat 4, Cat 5A, 5B, or 5C filers, okay? So if we look at the form here, again, remember in our example, John Q. taxpayer, he's basically almost all of the category filers, so we're definitely including it for him. Now, the way this schedule works is you report the gross income at the top, and then you have to back out kind of any exclusions that might apply. So remember, GILTI's only been around since about 2018. It was part of the Trump tax reform passed in 2017. And so GILTI income is this type of movable asset, intangible income, that kind of captures everything else if it's not already ECI or Subpart F, right? So I think the numbers here will make more sense when we dive into them. But if we look at our gross income here for the company, we have $32,335, right? So on our financial statements, that's the amount of gross income we have, right? Our capital gain income, dividend income, and interest income, okay? Now, the 32,335 is the starting point, and then what we do here on lines 2 is exclude the type of income that's already being categorized as one of these elements, right? So, for example, line 2A is the first one, effectively connected income, ECI. If this was a CFC that was engaged in trade or business and had to file that 1120F foreign corporate tax return, to the extent it has some of its gross income treated as ECI and subject to tax in the U.S., you would have a reduction here for the amount of gross income that's being treated as ECI, right? And so you do the same thing for all these other line items. Now remember, we've already covered the Subpart F income inclusion that was on Schedule I, right? So Schedule I, Worksheet A. So all of our gross income earned within this corporation, all of this here is being treated as Subpart F, personal holding company income. So that's why when we have our starting point here, 32,335, our Subpart F income is the whole amount. And then so when we have our total exclusions down here, and then we subtract the two, we get 0 for gross income that's going to be attributed to the GILTI inclusion. So again, so very important here that you fill this form out if you do have, if you meet this certain category of filer. But in our example and in many other examples, what you will have is that you might not have a GILTI inclusion because all of the income is going to be categorized as something else to begin with. So this goes along with the 5471 where we have John Q. taxpayer. We have his ID number, the name of the foreign corporation, an EIN if there is one, and then the reference ID. Again, remember using a consistent reference ID throughout the whole form, all the schedules, so it's easier to trace. And then the type of category of income here, right? So we pass category income that's being generated within the company, and then so we have, and then we've completed this, all the elements here, and it looks pretty straightforward, right? Again, what I wanted to do was a very simple example of 5471 with a CFC where you don't have any GILTI. I've got other videos on GILTI, calculating GILTI and completing the 5471, when you have an inclusion like that. But again, that's beyond the scope of this beginner series. So we're just using this example where we have all Subpart F income, so we're not going to have any GILTI inclusions. Okay, so that covers it for this video, and now we will move on to the next one.